Hey folks, Christopher Sachi here. It is Monday, January 27th, and that means this is the week ahead for the final week of January. Now, closing out last week on a month-to-date basis, have to say, it's been a pretty good start to the year. Market averages were up anywhere between 3 and 4% across the S&P 500, the NASDAQ Composite, and others. However, as we start the week, it does look like the market is poised to give at least some of those gains back. What's driving the market lower as we get ready to kick off the week is a set of fresh questions over AI. There was growing buzz over the weekend about a company, a Chinese company about 1 year old called DeepSeek, and its AI model that not only uses older chips, but it potentially disrupts the notion of the need for mega spending on AI, data center, and all that supports them. Here's the thing. Coming into the week, the market was kind of becoming increasingly short-term overbought. What does this mean? Put them together. We're likely to see the emergence of shoot first, ask questions later. That can be a very trying time for the market. And here's the thing too. Nvidia, well, it's the largest constituent in the S&P 500. And the DeepSeek news is weighing particularly on Nvidia because it has kind of become the golden child of AI. We're also going to see that ripple effect that I mentioned of these questions kind of pull through other areas of the market, not just AI, but other areas like energy and or energy infrastructure because of the role they have in supporting AI. So, in the short term, it's going to get a little bumpy, and I would say that for folks who pay attention to the January effect, you are going to want to pay attention to what happens to this week. But I do think that the market is likely again to be a shoot first, ask questions later. But it also means that we're going to start to get answers about how likely, how realistic DeepSeek is this week and next week. I say that because we will be hearing from a sea of big tech companies as they report their quarterly results. If you think about it, if a lot of these companies can get away with not spending as much, boy, wouldn't that be a positive for them, and wouldn't they comment about that? So I think we're going to have some sobering comments about DeepSeek and its viability. I do think that it's going to be a bumpy ride until we get those answers. But my suspicion is that a 1 year old Chinese company probably not likely to disrupt the likes of Nvidia, Microsoft, Amazon, and others that are investing in AI and AI chips. But we'll get the answers. And as we wait for these things to play out, there's about 4 other things to focus on this week. First and foremost, earnings season, you bet it continues. We've got over 100 S&P 500 companies reporting this week and about 9 Dow 30 components. But as I just mentioned, it's going to be the start of big tech earnings that are going to really matter and drive the market one way or the other, in part because AI data center has been carrying the market, but also because these companies tend to have a rather large composition of, you guessed it, the S&P 500 and the NASDAQ Composite. So this week we will be getting earnings, from Meta, Microsoft, Apple, SAP, ServiceNow, Intel, but also others outside of big tech, in particular Lockheed Martin, Boeing, General Motors, MasterCard, and Visa. So what does all that mean? It means it's going to be a very frenetic week. There's going to be a lot of data to chew through. And as we go through it, we'll have a better sense of, big tech spending. We'll have a better sense of the consumer, but other parts of the economy as well. That will take the place of the lack of fresh economic data that we really have this week. The only major piece of data that I would say we're going to get will be on Friday, and that's when we get the Fed's preferred inflation metric, the PCE price index, and what it says about inflation pressures in the month of December. Now, normally we would put a lot of focus in on this. Why? Because it's the Fed's preferred inflation metric. But last week we got the January flash PMI report from S&P, and it did show a number of interesting things, right? It showed that the economy was kind of impacted by severe winter weather storms. We know that, but it showed robust hiring, robust new orders, good for the economy, but it also showed an uptick in inflation pressures. Now, to that, we can add the fact that both the December CPI and PPI reports, well, hate to say it, they also showed that inflation was not really cooperating. In other words, it wasn't retreating and moving towards the Fed's 2% target, quite the opposite. At a minimum, we would say it was sticky. On the other hand, it was kind of showing that inflation pressures remain. So we put the two together, and I don't think the market's going to put a lot of weight in the December PCE price index on Friday. But before we get to that, we do have the next Fed meeting. The Fed starts on Tuesday, concludes on Wednesday. There's no expectation that they are going to deliver a rate cut. That's just simply off the table, no surprise, clearly telegraphed, we would argue. But we will want to pay attention to what they say in their policy statement and the tone of Fed Chair Powell's presser comments. Just given what we've seen in recent data, the economy remaining vibrant, inflation risks kind of skewing to the upside, we should expect the Fed to deliver a message that is, incrementally more hawkish than dovish. Some of the language that we're likely to hear Powell use will be cautiously proceed on the topic of rate cuts, something along those lines. But by and large, the market's going to have to figure out when the Fed might deliver that one rate cut it expects, and by that I mean the market. We could see it with oncoming data late this week, early next week, tip into the second half of 2025. That would kind of lead to a rejiggering of expectations. Now, the other part about this is that if you remember last week, President Trump said that he is going to demand lower interest rates. Well, to the effect that he's trying to demand those and the inflation data is simply not cooperating, it does set up a potential showdown between President Trump and Fed Chair Powell. If that happens, I think it's going to inject a fresh round of uncertainty into the market. When it happens, as we know, the market does not like that. It's really no friend of the market. So we'll want to continue to watch that and see how that develops. Now, on top of all of that and how it shapes the last week of trading in January, we will also want to, as you can imagine, keep close eyes on President Trump and the White House when it comes to tariffs. Over the weekend, Trump threatened to slap tariffs on Colombia, and as we learned this morning, Colombia, well, it caved. But as we move through this week and close out January, yes, we will enter February, and that means February 1st is quickly approaching, and that's the date that Trump bandied about for potential tariffs on Mexico, Canada, and others. Now, we'll need to see what happens. Do they go into effect? And if they do, we'll have to get answers to a lot of questions like which countries, what goods, how big are the tariffs, when do they go into effect? So as you can see, there's going to be a lot of questions that we need to get answered. There's also the potential for this to be a little bit of a game of chicken, just like we saw with Trump's weekend comments on Colombia and Colombia backing down. So there's going to be a lot that happens this week from what we learn on the earnings front, the Fed's comments, and of course, Trump and tariffs. It's going to be a busy week, but an important one for the market. So I would say this. That is the week ahead, but be sure to check back for our thoughts as we move through it and tune into our latest batch of signals for our targeted exposure models. You can see more about them below. Thanks for watching.